Jason, welcome to the show.
Awesome. Glad to be here, man.
Yeah, it's great to have you. For listeners, if you are not watching this on video, I do need to point out as we start that I'm the only one here without a mustache today. But
might as well get out. Just leave.
Or get to work.
Awesome. We're pumped to have you. This is going to be such a fun and exciting episode. So let's dive into it.
Yeah, Jason. So I just want to start with an easy one. Why did you start Olive Holdings, and like, what's the overall goal?
Yeah. So fundamentally, even at its foundation, it was to build stable assets with others. And so that's kind of like the why. It's also the goal, right? And just to break that sentence apart, building stable, right? Not just assets, but stable assets, and then doing it with others as opposed to on your own.
Yeah. Yeah. So like longer term, what is the strategy behind that like mission statement? You guys are, just for listeners who maybe don't know very much about it, you guys are essentially a holdings company. You're creating sort of opportunities to buy or take partial ownership with smaller businesses locally and I think further away as well. Just like break down the model a little bit.
Yeah. So I'd say, like, really, again, fundamentally really breaking it down, we're private equity that is active in our investments, right? And so when you're a holdings company, you can buy whatever you want. You can buy maybe stock in Coca-Cola. We could go and buy a lumber mill, 20% equity in a lumber mill down the street. We're choosing to focus specifically on residential repaint companies because those are things that we can be very active in. So we're active investors in companies.
What is the value proposition of this model for you guys, and sort of what's in it for the business owner? Like, why does this make sense for both parties, in other words?
So for us, it's, I guess you'd call it specializing, right? So we're all pretty, and this, you could kind of put this on both sides, but we're all pretty competent human beings. We all Canada's very similar to the U.S., but I'd say U.S. is a land of opportunity, right? So there's a million different things that we could lay our hand to and find success and thrive. But the ability to specialize is focus on what you're really, really good on, and then leverage those around you that have complementary skill sets. So for us, we're really good at scaling businesses to maturity, and we can do the whole founding thing. We've done it a handful of times. We've done it with Paris Painting. We've done it with Haven Builders here in the Twin Cities. But the ability for us to specialize on the scaling portion of a company's life cycle, that's really the value to us. To like a founder or someone we're partnering in with, the value prop is really their ability to collapse time and de-risk the process.
Right.
So I guess maybe to back up one step, you kind of have to start with the assumption, which is part of a filtering process, but does that founder want us to build their company to maturity to where it's a stable asset? And that is kind of, it's very different than what you call a lifestyle business. So a lifestyle business is where so a great lifestyle business is one where you work very little and you make a lot of money.
Right.
So I don't work that hard, but I make a lot of cash. But at the end of the day, I own an awesome job, right? It's not a stable asset. A stable asset is something where your equity produces a profit independent of your energy and effort. When you have a lifestyle business, you actually have like a boosted income because your profitability comes from your equity, but it's dependent on your energy and effort producing that result. So the ability for them to de-risk that kind of end stage. So it's more likely that you'll achieve that goal when doing it with others, specifically others that have done that before you, but then also collapsing time. Right? You're more likely to do it on a quicker time horizon with others, specifically those who have done it, than if you try to embark on that process on your own.
Yeah, it's like, these business owners get it from, just to like throw out some, random numbers. It's like they get it from 0 to 100. You guys help them take it from 100 to 1,000. Like there's sort of a different range that your skill set really allows you to add value to. Is there something about that startup phase that you guys, are trying to avoid? Is there something that you don't like about it? Like we've all like done the ground up start a business thing. I certainly know how I feel about doing it. It's very, very difficult. I wonder if there's, some you're strategically missing it for some reason.
Yeah, so there's certainly, I mean, it's hard work. There's probably no other way to put it. It's we refer to it as brain trauma. There is brain trauma that happens when you want to found a company and take it from 0 to 1, right? And again, we're all capable of doing that in life. It's just after you've done it a handful of times, it's not something that you volunteer for if you don't have to.
Right.
And it's something that we want to honor, and that's why when we partner with companies, we come in and make a financial purchase, an acknowledgement of here's the momentum that you've created, despite it not being, maybe an asset that someone would typically purchase. We believe that our unique ability to come lean in and drive it to that point is something that we're willing to at least acknowledge what's been, built in value so far.
Yeah.
And sorry, quick question here, Jason. When you when you say like you guys take a fairly active role when you purchase a business, tell me a bit about like what do you guys as an organization do? Like what do you mean by the term active? What level of involvement do you have? Whether it's active operationally or like as a really in-depth advisor, what does your organization's role look like in one of these businesses after acquisition?
That's a really good question. So I talked about at our core we're private equity that's active in our investments, and so. We're trying to make good investments, and we believe that the best way for us to do that is to do something we have domain expertise in, where we can affect the outcome of our investment. So there's a number of different ways we can do that. I'd say kind of start from the paradigm of we're coming in as a minority investor, which means we're not going to run the company for the founder.
Right.
Right? If we were a majority owner, we would run the company for all the shareholders. But whoever the majority shareholder is, they're going to run the company. So we're in a sense taking that advisory role. But there's kind of a different layer then that adds on, where a lot of people aren't just asking for advice or the models or here's how you do it. They want someone to do it with them.
Right.
And that's the gap that we're trying to fill is typically if someone wants to be told how to do something, they're going to join BTA.
Right.
And then you guys have taken people and showed your numbers speak for yourselves as far as how you can bring people to success. There are some individuals who maybe they want to get to a separate tier, a different tier, or that model isn't. They just want someone to do it with them, right? And sometimes they want to do some things for them, and that's where we'll lean in. It's kind of up to the founder to what extent they want us to be involved, but it could be we're always going to do the baseline things like build out a VTO together, craft a 1-year plan, go do quarterly reviews, have a weekly call of strategy, solve the big fires together. But maybe they need someone to fly in, recruit, hire, and train a sales rep because they know how to do it. They're just not going to do it. And as a partner, it's kind of like, I would love it if you would do it. If you're not going to do it, I'm going to do it. Right. That's a very important thing for me to do. There's one other example for a guy I was talking to in St. Louis. He was telling me, he's very production restrained, so he can sell to the moon, right? Mm-hmm. And he says, this year I'll probably sell $600,000 more than I can produce. I'm like, well, I'll just tell you, that's an issue that everybody who is a shareholder in your company is very motivated to solve, right? And if you're not going to solve it, I'll be honest with you right now. We're going to solve that because there's a very large incentive for us to figure that out. Yeah. So that's kind of like, I don't know if that answers your question. I think it does. I kind of described like philosophically, we come in as a minority partner, so we're not taking over full operational control. That remains, that's in the seat of the founder's hands. Yeah. But we are at their disposal to fill the gaps. We come in expecting that there's gaps to be filled. Otherwise, they wouldn't want to partner with us.
Yeah, totally. So you're a very, very active investor. Like you own equity in it. You are advising not only just at a high level strategically, but on day to day sometimes, but definitely weekly type of like accountability. Like we were all in College Pro Painters, kind of like a general manager would do with a franchisee. We were holding accountability weekly, but as needed, you'll also dive in and roll up your sleeves and just make big moves happen when you need to unplug a restrainer.
Oftentimes it's kind of like if we step back as investors and look objectively at the business, we kind of look at it and say, here's the state of the state. Here's a big rock we need to develop. And I'll go back to the sales rep one because it's an easy one to do. This company needs to, we have the playbooks that you've gotten through the partnership and you have everything spelled out. We've got a learning management system and all that's there for you. But someone is going to have to train this new sales rep. Founder, are you going to do it? No? All right. Founder, I would recommend that you hire somebody to do that. You can go to the market and find somebody. I'll just tell you, we're willing to do that.
Right.
And someone's going to have to fill that gap.
Yeah, you guys have skin in the game. There's enough motivation at times to do it yourself. Hopefully not to an extreme degree.
It's actually,
but
yeah, some of the conversations we've had is like, so whoever the manager of the company is, typically the majority shareholder, it's ultimately, their responsibility to get things done. And if something doesn't get done, as a shareholder, it's not my fault, but now it is my problem.
Yeah.
right.
And that's kind of when you have a co-owner or you have partners, it's kind of nice. And I've experienced this with Paris Painting. It's kind of nice when it's other people's problems too, right? It's like, it's not just all on my shoulders. It's not just my issue. I have other very incentivized shareholders who are going to solve this issue, not because it's their job, not because they want to, but because they have a lot of wealth, that's a lot of equity, like just real ownership in how this gets resolved.
Listen, if you like that clip, you can watch the full episode by clicking here. If you're not yet subscribed, you probably should be, and you can do that by clicking right here.